Welcome to Charts Today. My name's David Linton, and today's edition for Wednesday, the 12th of May, comes to you from London. And we start by looking at the dollar index. Markets actually had quite a sell-off over the last couple of days. So we start by looking at the dollar index. It did lurch lower on Monday. We are just seeing it flatlining now, but we are into now medium-term bearish territory below the cloud. So remembering this is my weekly, daily, and 60-minute chart, long-term, medium-term, and short-term view of the market. If we're above the cloud, we're bullish. If we're below the cloud, we're bearish, and so the dollar is looking set to fall further. Looking at the euro, it is rising, and we see we're flatlining the last couple of days, but we do have a short-term target some 7% higher. These longer-term targets quite a bit higher. So weaker dollar is still the theme. Taking a look at sterling, we're sitting at 141.39, so quite convincingly through that 140 level, not breaking the February high around 142.50, but we do have targets into the 150s. We've got 146 as a target in quite a few places, so that looks likely. The euro, sterling sitting at 116.46, so looking stronger here as well, having bounced on the cloud, bullish on all three time frames with good upside targets. So sterling strength is key. Bitcoin sitting at $57,000, just fairly steady at that level. Just short term a little bit bearish, but medium and long term the chart's still looking good. And looking at the S&P 500 index, that fell away again last night. So we've seen quite a lot of volatility kicking in. The longer term trends are still okay, and we do have upside targets, but we are just seeing concerns mostly around inflation, and we're seeing tech especially badly hit, falling away. Did recover yesterday, but still looking worrying. And we're seeing the S&P 500 future is down very slightly this morning, and the Nasdaq E-mini down also. So markets set to open flat on the basis of the futures at the moment. The VIX volatility has really jumped this week, so we're back into the 20s, not historically high given where we were over the past year, but just short term now the fear index is bullish, means the markets are more fearful. And the FTSE future is actually up this morning, recovering after yesterday's falls. The DAX in Germany, the futures up 0.5%, the cash market up 0.25%, and the CAC 40 in France up 0.25% as well. But we're seeing this sharp sell-off is affecting markets. Japan was down 1.5%. China, Hang Seng was up 0.6%, same in China, and India was down just over 0.5%. And the resource-laden Aussie market down 0.7%, but we are still just holding that 7,000 level. Struggling to just break to new highs, one of the few equity markets in the West that's actually struggling to do that, but holding on all the same. Looking at some of the commodities, we've got corn up a further 1%, looking very strong indeed. And if we look at gold, we're sitting at 1832, normally a beneficiary of uncertainty, but it's just been flatlining most this week. But we are wandering back into bullish territory. Just need to clear resistance there on the lagging line on the daily cloud. And silver looking strong indeed. Now we're seeing this potential breakout of this consolidation pattern. That will be significant. And we're seeing copper up 1.2%, just continuing to rise. Looking at the bond yields, we're sitting at 1.62. Got targets into the 170s. 173 looks a likely target. 183, and of course the big one is 3.26%. So this is where inflation worries are being fueled. 30-year yields also looking very similar, of course. Taking a look at the energy mix, we've got Brent crude up this morning, but really struggling. This US pipeline issue not really causing any great concerns. Brent just struggling to break to new highs. WTI closer to home there, of course, is actually still also struggling to make new highs. We have broken into bullish territory above the cloud on the short term. We do have an upside target higher. The charts are still bullish, but we are just struggling to break that resistance. US nat gas sitting at $2.94, just again struggling to get above that $3 mark. Bob, gasoline prices more the thing to watch. We did have that spike up on the pipeline news, but we've really fallen back. We will probably see an interesting situation where fuel prices will fall at one end of the pipeline where the storage becomes an issue, and they'll rise at the other end of the pipeline where demand is outstripping supply. Coal sitting at 79.40, really nudging this $80 mark. We were bullish coal this week. We're also bullish emissions this week. They continue to rise. 54 is where we're at. Gas is actually looking a little bit stronger. MBP and TTF looking strong. Again, we were bullish this week. We felt that power markets might take a breather, but in fact we've just continued to push higher. Lots of upside targets on German power, so if you're trading German power, keep an eye on those 1 minute targets. That's the thing to watch. And if we look at Nordic power following suit, although we are just a little bit more range bound there on the CAL and the quarterly as well. That's it for today. Until tomorrow, happy charting. See you then.